Hi, good afternoon. My name is Joanna Nelson, and I'm with the New Mexico Economic Development Department. And we're so glad that you're able to join us for this important information session. We are hosting New Mexico Finance Authority, and they're going to be providing an overview of their enhanced Small Business Recovery Loan Fund program. So we're really excited to work with them and hear the updated information. I did want to go over a few logistics before we begin. We are live streaming this to Facebook and YouTube. So feel free to post your comments, post your questions, and we will be seeing those in real time. And we'll do our best to answer those at the end. And I did want to remind folks that this is being recorded, so you'll be able to watch this afterward if you have to jump off, or hello to those that are watching this post session. And if you have any questions, feel free to reach out to us and we'll get those. As well, if you registered and sent us your email, we will send out the slides to all of those that provided their email. So look for that hopefully today or tomorrow. I am going to try to share my screen really quickly. Bear with me 1 second, and I'll give a brief overview. Let me see if I can do this really quickly. Of the EDD department. While we have your attention, this is an overview of the New Mexico Economic Development Department. As you can see, we have a few different divisions. Our Cabinet Secretary is Alicia J. Keys. Our Deputy Cabinet Secretary is John Clark. And I did want to say a shout out to our newly formed recovery team. And they are actually joining us on this call. And you'll see that our newest team members are Jennifer Myers, the statewide recovery coordinator, Felicia De Paula, program specialist, and Alex Greenberg, financial program specialist. We're going to be doing our best to answer your questions as the information session goes along. If you have any questions, they are available for assisting you. So feel free to reach out to them. Here's an overview of our financial programs. I'm not going to get into this at this point, but you'll have these slides when we send them out, and you can follow up with them, and hopefully they could assist you in your projects. I did want to give a mention to our Economic Development Department representatives who are located in these areas of the state, in these various regions. These are our boots on the ground. They represent our department. They live in the regions that they are working in, and they are well connected to not only business resources, but community development resources, and are able to assist you firsthand with any questions that you might have and connect you to resources. And then last and finally, I want to make sure that everyone is aware of how to stay connected with news and updates from our department, especially as they relate to recovery efforts. Our big way that we're trying to get information out is our weekly wrap up. And hopefully you're getting those, but if you're not, stop everything and sign up for this. We are putting out pretty much a compilation of national resources, national news, state resources for businesses, nonprofits, and communities. It's a great way to be able to scan and survey what opportunities are out there. We're also putting webinars, not only state webinars, but national webinars as well. Here's our website, gonm.biz, and then you can go to our YouTube channel. And this is a great way to see past information sessions on opportunities that are out there for businesses and nonprofits and communities. Okay. All right. Well, I'm going to turn it over to the CEO of the New Mexico Finance Authority, our great partner, Marquita Russell, and she is going to share information about the New Mexico Small Business Recovery Loan Fund. Marquita?
Great. Thank you, Joanna, and thank you all very much for joining us today. I'm very happy to be here today to talk to you about the expanded Small Business Recovery Loan Fund. First, 1 second about who we are. The New Mexico Finance Authority was created in 1992. We are a government instrumentality created by state statute, but not a state agency. Our our mission is to improve the quality of life for New Mexicans, and we do so by providing infrastructure financing as well as funding for capital equipment and economic development projects. You may have heard of us starting about this time last year as we were named back in the first session of 20 first special session of 2020 as the administrators of the first version of this Small Business Recovery Loan Fund. So I'm very happy to be here today to talk to you about the new Small Business Recovery Loan Fund. Um, the loan program itself, which is now a $500 million loan program, is funded from the state's severance tax permanent fund. So, as money is needed for this program, we're able to go over to the state severance tax permanent fund and ask for a distribution in order to fund loans to small businesses. We don't move that money over until we need it, and it stays invested until there's a loan that needs to be funded. And I should mention that this is a groundbreaking use of this funding. Economic recovery and stimulus has not been a purpose of the state small business of the state severance tax permanent fund before, and we think that the state's going to find a significant payoff from the investment it's making in your small businesses. But again, the Small Business Recovery Act of 2020 created this fund. It provides loans to businesses that experienced financial hardship early on in the pandemic. During the 2021 session, the one that just finished, the legislature passed and Governor Lujan Grisham signed into law the expanded version, which is called the Small Business Recovery and Stimulus Act. And it increases substantially the access to the loan fund and offers businesses and nonprofits enhanced loan terms. So I'll go through a few of those today. But if you participated in any of our webinars before, or if you even were a previous borrower, I'd like to start by highlighting what's new. First off, there's broadened eligibility. Simply stated, more businesses are now eligible. The maximum annual revenues for a business increased from $5 million in gross revenues to $5 million in net revenues. We'll go through in a little bit what that means exactly. The number of and kinds of eligible nonprofits increased from 501c3 and 501c6s to include 3 additional kinds of nonprofits, and those are benevolent organizations and organizations that deal primarily with veterans and military affairs. There is a component that requires that these businesses be owned by New Mexicans, and the prior target was 80% ownership, and it's now been reduced to 51% ownership by New Mexicans. So that means that if you have a partner that lives out of state, or it's a family-owned business and your parents have just moved, you wouldn't be able to meet that 80% ownership target. It's now down to 51% ownership, which gives you a great opportunity to apply. There's also a new caveat which allows for non-New Mexican-owned businesses that regularly employ at least 10 full-time New Mexicans. They now also become eligible for the program. So substantially broadened eligibility as it relates to New Mexico-owned businesses. The other thing, and very importantly, there is an expanded eligibility determination, and it's been significantly streamlined. So before, you had to be able to demonstrate a specific amount of revenue decline in 2 very specific months in 2020 as compared to 2019. The pandemic has obviously gone on longer than I think was initially anticipated. And so now there's the ability to kind of get fast tracked by really selecting one of these criteria so that you don't have to keep supplying us with documentation. So now you can evidence your negative impact from the pandemic through what's called substantial disruption to your operations or substantial decline in revenues. So those are important factors. The other thing is that there's now increased loan amounts. So prior to the new change in law, the amount of loan that you could get was 2 times your monthly business expenses, and that's now been increased to 3 times. Applicants may choose the amount of their loan up to 3 times of their average monthly expenses. That definition for average monthly expenses is now been modified so that CARES funding that you may have received in 2020 or even in 2021 no longer reduces your monthly expense. So it had been counting against you if you were able to get funding from one of those other sources. And then lastly and importantly, the maximum loan doubled from $75,000 to $150,000. So broadened eligibility, increased loan amounts, and lastly, expanded use of loan proceeds. That you may still use these loan proceeds for any ordinary and necessary business expense. And that includes a small portion for salaries to equity owners. So no more than 20% of the loan proceeds may be used for salaries to equity owners unless you're one of those small businesses who only employs yourself. You don't have paid employees outside of yourself. Those are frequently referred to as non-employer businesses, and the new law allows you to use up to 50% of the loan for compensation to you as a business owner. So that is a substantial improvement to the program as well. In addition, the law has been changed to explicitly provide that you may use loan proceeds to adapt or improve assets, including real property. This may be important if you need to build, for instance, a patio to your restaurant to allow for more outdoor seating, or to change up your HVAC system to get a more efficient system in there. You can also use the funds to purchase or improve any assets to develop your e-commerce business. So if you need a new website or if you need new shipping materials, you may use this in order to increase your e-commerce. So let's get back down to the basics. What is a qualifying business under the Small Business Recovery Loan Fund? Well, as I mentioned earlier, there are several types of nonprofits. The 501c3s, which are charitable organizations, 501c6s, which are your associations such as chambers of commerce, 501c8s, which are your benevolent organizations such as your Eagles clubs, that sort of thing. 501c19s and C23s, which again are typically things like your VFWs, American Legion, anyone dealing with military affairs. All of the nonprofits must be subject to the State Nonprofit Corporation Act. That's a specific state law, but I believe largely that most of the nonprofits in New Mexico are already complying with that act. So I don't think that's a significant change. If you're a sole proprietor, 100% of your assets must be owned or leased by a New Mexico resident. And then lastly, other for-profit businesses, which include corporations, partnerships, joint ventures, limited liability companies, any other sort of business entity, must be at least 51% owned and controlled by one or more New Mexico residents, or you must maintain a physical location within the state and employ at least 10 full-time New Mexico residents. A New Mexico resident under the law is an individual who is domiciled or physically present in the state during any part of the year for at least 185 days. We are simplifying that evidence by asking for your driver's license or government issued photo ID card with a New Mexico home address. If you do not have a if you recently moved to the state, for instance, and so your driver's license doesn't have yet your new address in New Mexico, you can supply us with your driver's license from another state or your identification card that shows a residence outside of New Mexico, and then submit a recent utility bill that has your name on it and shows that you are a New Mexico resident, or that you reside in a New Mexico location. And lastly, the other business requirements include that your business was established prior to the pandemic. So if been operating for years, obviously that won't be an issue. But if you're a newly established business and maybe just started opening your doors, um, right as the pandemic started back in maybe February or March of 2019, you are now eligible. So the eligibility was broadened by at least a year to allow for additional businesses to be able to apply. And then you had annual net revenues of less than 5 million. As I mentioned earlier, that cap in the prior legislation had been gross revenues. Now it's net revenues, which is the definition of which is your gross revenues minus your cost of goods sold. And we're going to look at your either 2019 or 2020 federal income tax to determine that you are an operating business and that you have these net revenues of less than 5 million. And it's up to you. You get to choose which of those tax returns you'd like to submit to us. I think, again, as I mentioned earlier, one of the biggest improvements to the law was the streamlined definition of negative impact. So now you have to show either a substantial disruption in your operations or a substantial decline in revenue as a result of the public health orders. The definitions for these are fairly straightforward. A substantial decline in revenue means that you had a decline in your gross receipts by more than 20% from any period in 2020 compared to that same period in 2019. And we will use a report that you submit to the Taxation and Revenue Department for reporting your gross receipts for purposes of gross receipts tax. And that can be monthly, quarterly, semi-annual CRS reports. So whichever you choose, if it's the month of July, then you need to show us the month of July for 2020 and for 2019 in order for us to determine the 20% decline. It is, again, your choice. If you are not subject to gross receipts tax, for instance, if you are a nonprofit, but there are other businesses that are exempt from gross receipts tax, then you are able to submit both your 2019 and 20 tax returns, and we can look at those documents to evidence your decline in business revenues. So that's how you're able to substantiate your decline in revenues. So you can meet one of those two, or you can meet the substantial disruption in operations. And this is a much simpler definition for most New Mexico businesses. It means any one of these 4 items: that your business was closed for 14 or more cumulative days, and that's via self-certification. That you had to reduce operations for a period of at least 30 days, again, a self-certification. That you had a reduction in staff of at least 20% from any time since December 31st of 2019. And we're going to look at this instance at unemployment forms that you submit to Workforce Solutions. We're going to look at it as of December 31st, 2019, and any quarter that you choose in 2020. And then lastly, you can evidence substantial disruptions by a 20% increase in your cost of goods sold or your other operating expenses. And again, similar to the evidencing your decrease in revenues, you submit both your 2019 and 2020 tax returns. So it's any one of these 4 items or the other 2 substantial decline in revenues. So just one of those tests needs to be met in order for you to be determined eligible for the program as well. Lastly, there are some things that the law requires. It requires that you understand that you're receiving a loan that must be repaid with interest under the terms of the loan agreement, that all the documents you're submitting to NMFA with the application are true and correct, that prior to the public health order, so prior to March of 2020, the applicant was current on all tax obligations to the state, and that the proceeds will be used pursuant to the Act. So those are the certifications that we require as part of the closing. So we also ask them as part of the application. And then lastly, we want to make sure you are who you say you are. And so we are going to be looking for some credit and identification standards. As online pandemic financing has become more prevalent across the nation, there have been more bad actors, fraudsters who want to take advantage of these streamlined systems that are intended to help business owners like yourself, but instead they obviously have a more nefarious target, and that is to pretend to be you and to try to get money that is otherwise meant for you. So we are using increased technology in order to make certain that you are who you say you are, and we are going to be looking for things like a checking account at a federally insured financial institution, because they also have similar credit standards or identification standards in place before you can open up a checking account there. And then we also will be looking for minimum credit standards, which is required by the law. And there we're going to use a similar standard as we had back in the last year program, which was that prior to the pandemic, you must not have had any collection efforts or charge-offs for your business by any telecommunications, utility, or rent or mortgage creditors. So that's the basic credit standard for all businesses applying. We will be looking at business credit reports to make that determination. And it's really important for me to make clear that a lack of credit is okay. It's, if you are what they consider stale credit, maybe you don't take out loans very often, or you've never taken out a loan and don't really have any credit. That's fine. We just want to make sure there's no bad credit out there. So we're going to be looking to see if you have charge-offs or collection efforts from those three creditor types. And if you do, back from 2019, then that will be a problem for proceeding with the loan. But if it's during the pandemic, obviously we understand those sorts of things happen. So, we will obviously take that into consideration. So the loan amount itself is 3 times the monthly average expense, not to exceed $150,000. And again, you'll be able to choose the amount of loan that you're applying for up to this amount, up to the 3 times amount. And monthly average expense is equal to cost of goods sold plus any expenses less depreciation, and then divided by 12. So we're going to take your tax return and look for those line items. We're going to look for your cost of goods sold. We're going to take your total expenses. Any non-cash expense, such as depreciation, that you've claimed on your tax return will be deducted from that, and we'll divide by 12 to get your monthly average expense. So you may have 3 times that amount up to $150,000. The interest rate is still at the incredibly low interest rate of half of Wall Street Journal Prime. Wall Street Journal Prime currently is 3.25%. So the interest rate, which is fixed at the time we make the loan, currently would be 1.625%. So incredibly generous terms from an interest rate perspective. Also, I might add, from a repayment perspective, the original loan program offered loans of 3 years interest only, at which point you repaid your principal. And if you didn't want to repay it at that point, or or could not repay it at that point, you had 3 years in which to pay off the loan with monthly payments. The terms have been improved even above that. So now the terms of the loan under this new program are that there is no interest accruing at all during the first year. There's what one of the legislative sponsors called an interest holiday for that first year. Thereafter, for the next 2 years, year 2 and year 3, it's still an interest-only payment, and it's due annually. So you will be making 2 payments in the first 3 years. After that, for years 4 through 10, you will be then making your principal and interest payments monthly. And applicants with good credit history may request loan payments be made quarterly, semi-annually, or even annually. So we're going to look to see that you have, in this instance, some track record of meeting your prior loan payments. And if you do, then we certainly take that into consideration and would likely make you loans then with less than monthly payments. The new terms of the law allow for personal guarantees and collateral. Loans of up to $75,000, however, have no personal guarantees and have no collateral requirements. So that is unchanged from the first program. But loans on amounts greater than 75,000 are now subject to personal guarantees. So any owner that has at least a 20% ownership in the qualifying business is required to give a personal guarantee. And again, this is on the amounts greater than 75. So let's say you have an $80,000 loan. There would be the personal guarantees on $5,000 because the first $75,000 don't have a personal guarantee requirement, nor is there a collateral requirement. On loans on those amounts greater than 75,000, we have the personal guarantees, and if there is, if you have good credit from 2019, then there's also no collateral required on the additional amounts. But there will be an additional look at credit if your loan is greater than $75,000, and we're going to want to see that there's no derogatory credit at all in 2019. So we are going to be looking to see if you had any collections or charge-offs, not just those telecommunications, rent, mortgage, or utilities. If you had any charge-off or collection efforts, then we will be requiring liens on working capital and equipment. So it's, again, just the amount over $5,000, and we will take a collateral interest in either your working capital or your equipment. And it'll be at the term so that it doesn't mess up your other bank loans, should you have any, but we do need to become a secured creditor in those instances. I think the only other thing I would mention is that loans of any size to a nonprofit do not require guarantees because, of course, there are no owners in a nonprofit. They are put in place for public benefit. So the I'm sorry, was there a question?
I think we lost you for a second, but you're good now.
Oh, I'm sorry. I have very, very bad internet today. My apologies. The wind blows and the internet goes out. So I think I got through the collateral and the personal guarantee section. I'm happy to go through that again because I don't know where I dropped off.
It was just the last about 2 seconds.
Oh, okay. All right. Well, I think I went through that, and I'm happy to go through that again should there be additional questions. But I think it's all pretty straightforward on the slides that'll be sent to you. And I wanted to touch on, importantly, refinancing any of your prior loans. This loan program can only refinance small business recovery loan funds. So if you had a loan from last year and you'd like to take advantage of the improved terms, then please come in and get refinanced. You don't have to increase the amount of your loan, but you are certainly welcome to. So you may come in and just get better terms by applying for the program, asking for the same amount that you had under the first program. We will then increase the loan amount to include your accrued but unpaid interest if you'd like, or you may make your interest payment at the time before we refinance it. So it can either be exactly $75,000, for instance, or it could be $75,000 plus the accrued interest. But either way, we're in a position to let you have access to the money at these improved terms. And the loan payment dates will get reset to the date of the new loan. If you are looking to refinance and you are looking for more than the $75,000 maximum that you had in the first loan, then you are subject to that additional credit standard, and that is that look back to 2019 to see that you had a responsible credit behavior. I think that's the only way to describe it. We want to make sure that you haven't had any collections or charge-offs and that you met your commitments. And that guarantees, as we talked about earlier, are required on all amounts greater than $75,000. The application process for this round will be slightly different than prior rounds if you applied before in 2020. Businesses will apply through an online application that's going to be accessed at our website, which is nmfinance.com. We are requiring that you register and get an account for this application portal. The application is scheduled to open in 2 weeks on April 29th and will be open until May 31st of 2022. Applications are processed on a first come, first served basis, and submitted applications will be reviewed by NMFA staff, but because you'll have a registration, you'll have a username and password, you'll be able to go in and both check the status of your applications or make corrections. If we've contacted you, you can make them directly through the application portal. So it's a streamlined way to get your application approved and for you to check the status of your application as it goes through our review and documentation process. This also means that you can now save your application. In prior iterations of our programs, you were unable to save it. You had to sit down and get it done all at once. And if you didn't have a document that you thought you'd have, you might have to start over. And so now we're in a position to allow borrowers to go in, start the application. You can get it done all at one time, or you can get it done as time permits. But that is a benefit to the program that we didn't have available last year. The application will still require that you have all of your documents available in an electronic format, though there are many fewer now. And you can save them, you can add them later to the system. But again, any time it takes to correct any documentation will simply increase the amount of time it takes for us to process your application and ultimately to fund your loan. So try to make certain that the information you're providing is correct up front and will save you some time in making minor amendments to your application. The documents that you're going to need at the time of application is either your 2019 or 20 business tax returns, and that's again to evidence that you are an operating business and have annual net revenues of less than $5 million. You'll need driver's licenses or government-issued photo IDs for the authorized officer and any equity owner that owns more than 20%. Often your authorized officer is an equity owner, but for instance, in a nonprofit, there is no equity owner, but you do have someone that the board has authorized to submit the loan application. So that is the person that would be providing us with their ID. When you're submitting the application, the authorized officer is authorizing the NMFA to pull a business credit report. Additionally, we're going to be using some enhanced technology to verify the applicant's identity. So again, we want to make certain that no one pretends to be you and takes out a loan in your name. So that is of paramount concern to us, that we are making the loans to the people and to the businesses that the legislature and governor intended for us to. Additionally, though you won't need to provide us with any documentation, you will need to have an active bank account at a federally insured financial institution at the time that you apply. You'll be giving us the data. You don't have to show us your statements or a canceled check, but you do have to give us your account information. The account must be in the name of the business. If you are sole proprietor, obviously you can have your personal name on there as well. But we're not going to be making loans to a business that's, for instance, a corporation, and have the money deposited into one of the shareholders' accounts. It will have to go into an account in the name of the corporation in that instance. All of our payments are going to be handled electronically. When we disperse the loan, it'll be dispersed via automated clearinghouse, which means that we fund it, and about a day later, your bank should be taking it from the clearinghouse and putting it into your account. And your loan payments at the point at which it's time to start making loans will all happen online as well. We want to make sure we are able to capture and immediately apply all of the loan proceeds to your account. So we'll make certain that you have all the information you need to make your payments electronically. Other documents that you may need, and again, it'll be dependent on a number of circumstances, but you may need to upload these other documents. A credit authorization for guarantors, and that's for loans of more than $75,000. You may need to evidence substantial disruption through the reduction of staffing. In that instance, you may submit that Department of Workforce Solution Form 903A for both the December 31st, 2019 and any quarter in 2020. If you are evidencing substantial disruption through increased expenses, then as I mentioned earlier, you'll need to have both a copy of your federal tax return for 19 and 20. If you are evidencing substantial decline in revenues, then you're going to have to be providing us with additional information. And if you are subject to gross receipts tax, then you'll be providing us with one CRS form from 2019 and that same month and or time period in 2020. So if it's a quarterly payment, then it's the same quarter in 2019 and 2020. If you report monthly, obviously it goes back to that same month. And you get to select that. So you get to choose which month in 2019 over 2020 shows that 20% decline. We're not going to tell you which months need to have the decline. You can choose that yourself. And if you're, again, not subject to gross receipts tax and you are still needing to evidence your decline through a drop in revenue, then you'll be giving us your tax returns for both 2019 and 2020. Again, include your Schedule C if you're reporting this through your personal income tax returns. And that is the new program. We encourage you to stay up to date. Our website, www.nmfinance.com, has a page for recovery and stimulus programs. There we are keeping a copy of our frequently asked questions. Application tips and tutorials will also be posted. So we will keep adding as questions come up. We will keep adding to the frequently asked questions. And if people are finding difficulty with any portion of the application, we'll be putting videos up and other sorts of how-tos on that website page. Also join us on our mailing list. We have a recovery programs mailing list, and you can sign up for that also on our recovery page at nmfinance.com. And then lastly, obviously, if you want to talk to a person or deal very specifically with a question you have, You can email us at recovery@nmfa.net or call us at 505-992-9696. And with that, Joanna, I am happy to answer questions.
Great. Thank you, Marquita. And I'm putting up that website. Here we go. Thank you so much for that information. That was really concise and to the point. We have a lot of questions, so I'm going to try my best to give you a rapid fire of questions here. Marquita, we did get a question. If you want to go ahead and repeat, and some of these, as folks have tuned in during your presentation, you might be repeating yourself. So apologies for that, but it does help to get the information out. We have a question about if you could repeat when the application goes live and that period of application while it's open.
Sure. Let me share my screen again. I think I got off too quickly there. The application is expected to go live 2 weeks from today. So April 20, she says as if she remembers the date of today.
I think it was the 29th, wasn't it?
Yes, it's April 29th. Thank you.
Okay.
And it's open until May 31st of 2022. So you have 13 months to apply for the loan.
Okay, great. Thank you. And thanks all for your questions, for those tuning in on Facebook and YouTube. Let's see. Brian has a question. Are direct wages for restaurants included in the cost of goods sold for net revenue? That's a very specific question.
That is a very specific. So we're going to pull it off of your tax returns. So if your tax returns, we will literally go to the line items. If you have been accounting for your direct wages through cost of goods sold, then it will show up there. So
Okay.
the answer is going to be dependent on the way in which you and your tax advisor, if you have one, have been completing your tax returns.
Okay, that's great advice. I think that's applicable to some of the other questions I'm seeing.
And again, I had used, just to mention, I had used, for instance, the Schedule C because that's what we most frequently see with small sole proprietors or single purpose LLCs. But if you have, obviously there are other kinds of businesses that are eligible. If you don't file a Schedule C, if you file another schedule as part of your federal income tax, then you can supply that schedule instead. So if you're, for instance, a farmer, there's a special schedule. I think it's Schedule F that you file. So you would file that report with us as well. So I apologize if I was overly specific with some of my examples, but those are the ones we see most frequently are the Schedule Cs.
Okay, that's great to know. Stella has a question, and if NMFA already has some of the information on file, do we have to resubmit?
We are working very diligently to transfer over all of the sort of legacy information. So if you filed an application back last year, either as part of the CARES relief grants or as part of the first version of the Small Business Recovery Loan Fund, we have the information, but it will be a month or two before we're able to bring all the documents into that same portal. So if you already have submitted it to us, our apologies, but it will be fastest and cleanest if you resubmit the application. It will just save you a significant amount of time. So our apologies up front for having to give us something twice, but that is the best and fastest way to make sure that we're accessing the right document that you may have submitted.
Thank you. Robin has a similar question. about if you already have an existing small business recovery loan fund loan, are you able to combine that one with this new one?
So yes, we consider that a refinancing, Joanna. What we want to make sure of is that you have one set of terms. Since there has been a change between the 2020 law and the 2021 law, we want to be able to make sure that all of them are conformed. So if you want additional loan proceeds, or even if you just want to take advantage of the expanded repayment terms, then you apply, you check that you have a small business recovery loan fund, and we're able to redocument the loan. You're not going to be required to pay it back and then us make a new loan to you. We'll redocument it, and we will, if you're asking for more dollars, and everybody that applied back in last year is now eligible to receive more money for the reasons I discussed earlier. If you will just then send you the remaining dollars. So yeah, in combining them, we're actually refinancing the first one and resetting the terms to the new law.
Okay, great. Thank you. Nicole is asking, will priority be given to businesses that have not been able to participate in your programs prior?
So there's $500 million available for this program. We do not anticipate having a lack of funds to meet the business needs. So the applications are processed on a first come, first served basis. We spent a lot of time with the legislature and the governor in trying to create a program that gave access to people that didn't have access before. So we hope you take advantage of it and apply early so we can get you that loan. But they're all being handled on a first come, first served basis.
Okay, thank you. Kathy is asking, do independent contractors count as employees?
Independent contractors do not count as employees. However, this loan program does not require you to have employees. So there's no, unless you are an out of state owner, you don't meet that ownership requirement of 51%. In that instance, it would be it would be a detriment that you don't have employees. But otherwise, you can be it. The amount of employees you have does not drive the amount of loan that you'll receive. I hope that that's clear. Independent contractors are not considered employees, but there's only one criteria that requires that we look at employee base.
Okay, and in that same line of thought, Val had a comment looking for clarification around that criteria of needing 10 full-time employees.
Okay.
And I think this is relating to the out-of-state component. So if you could take a second to go back and highlight that distinction.
Sure. So the law requires that these be New Mexico owned, at least majority owned businesses. There is a caveat, though, for those individuals that cannot provide that evidence. Then you can show us that you have a physical presence in New Mexico and that you have employed 10 New Mexico residents at any time since January 1st of 2019. So we'll be asking for additional documentation in the instance in which you are using this caveat, this carve out for non-New Mexico based ownership. But that is the so if you're an out-of-state owner, or if you can't meet the ownership documentation, I think that's important. We'll be coming to you and finding that you have an actual physical location in New Mexico and that you have 10 full-time New Mexico resident employees. And we'll be looking at that point at that Form 903A that you report quarterly to the Department of Workforce Solutions. And we'll be looking for the addresses of your employees at that time.
Okay, thank you. Another question for you, and this person is looking for clarification on, is there a penalty for early repayment of the loan?
I am sorry that I missed that. There is absolutely no penalty for prepayment. So you may prepay any or all of the loan at any time.
Okay, good to know. Sherry is asking, if you are refinancing a loan from the 2020 program, is there any difference in how you're going to submit your application?
So the application will look very similar, except that you are going to have to create a profile within our application portal. And that, so you'll need to create a username and a password, and that account will then allow you to go in and ask questions or track down where your application is in the process. So it is a little different, and you'll be able to, until it's fully dispersed, you'll be able to check any any portion of the loan status through that portal.
Okay, thank you, Marquita. And I'm going through some of these questions. Some of them are very particular, so I'm going to again remind folks to submit those very specific questions to recovery@nmfa.net. And while I'm just going through some, Marquita, do you want to remind people of where they can find the application?
So the application will be accessed through nmfinance.com, which is our website. You'll launch into our application portal there. So it'll be very similar to last time, except again, you'll have a password so that you can come and go and save your progress on your loan application.
Okay, thank you. And we do have a few questions requesting that you go over again, or at least show that slide that shows the eligible cost or the expenses that you can
Sure.
use the loan for. There's quite a bit of questions around that. And I
Sure.
know that continues to come up.
Let me bring up that slide. So the loan proceeds may be used for any ordinary or necessary business expense. And we're going to disperse the loan proceeds at closing. We're not going to ask you to provide us with documentation and have us disperse it, as you have expenses. You will be given the funding upfront. You'll have to certify that you're going to use it for one of these purposes. And that's ordinary and necessary business expenses. If you are a business that does not have any employees, you now have a greater use of those funds to help pay for owner compensation. So you were limited as a non-employer business. You were limited before to only 20% of the funds being able to pay you as an owner, as the worker. Now you may use up to 50% of the loan proceeds to help pay owner compensation. Employer-based businesses, those that have paid employees other than equity owners that report to the Department of Workforce Solutions, up to 20% of the loan may be used for salary to equity owners. So the legislature and the governor has given non-employer businesses expanded use of the loan to allow for them to pay more of their own kind of costs of doing business, being, because they have less ability to get unemployment and other things. So there's been less resources made available to non-employer businesses, and this is one way to try to make that up, is to allow up to 50% of the loan to be used for business salaries, basically. The other ways that the money can be used is to adapt or improve assets. So if you need to, um, you know, rearrange your offices to make them more COVID friendly, or if you need to add on to a patio in order to make the area in which you conduct business greater. Um, all of that can be done through the loan using the loan proceeds. And you can use any portion of the loan to purchase or improve those things that are necessary for you to do e-commerce, for you to have an online presence, and for you to sell your products over the internet rather than just in person.
Great, thank you. And I am seeing quite a bit of questions that have already been answered. Were pretty specific questions. So I believe, in looking at time, this has been about an hour, and we didn't want to go much over an hour.
Sure.
I do want to remind folks that we are going to be sending out the slides to everyone that provided their email in that registration link. You'll get that. You'll get the recording to this presentation. And then I'll throw it back to you, Marquita. If you have anything else you want to close on, go for
Sure.
it.
I think, what I would mention is that the law has given a lot more flexibility to the way in which you demonstrate that you're eligible for the loan. So please, if you have any questions, please give us a call. You can choose your 2019 tax return. You can choose your 2020 tax return if you've already got that filed. I know a lot of folks aren't in the position yet to file their 2020 tax return. We understand that. So you can certainly use your 2019. Take advantage of the expanded definition for negative impact, which includes the substantial disruption. If you have a standalone business, I mean, if you have a business that's open to the public, you almost certainly had disrupted operations. And the intent of the law was to make this easier for businesses to show that they were impacted, not make it more difficult. So please look at that. Make certain that you see that that you can self-certify that you were impacted through substantial disruption. And if not, we can look at either tax returns or some other way to demonstrate your impact. But it was done very purposefully to make this as easy as possible for you to access these funds. So please take a look at that. And the other thing that I would mention is that we are not underwriting loans like a bank would. We're not looking to see whether you were profitable or not. We're looking for businesses that qualify under the statute, that you've met the criteria for being an eligible business, that you had in 2019 prior to the pandemic, that you've demonstrated responsible credit behavior, and that prior to the pandemic you were current on your obligations to the state. Those are the key characteristics we're looking for. If you didn't make a profit because you had just opened your doors, that's not going to prohibit you from being able to move forward. We've put in place as much as we can to make this as easy as possible and to make as many people have access to the program. So please take a look at that. We have lots of really talented staff on hand, already trained, that can start answering your questions. That recovery at nmfa.net is a really good place. The frequently asked questions are also very helpful, because as we get in questions from the public that we didn't think about, we certainly are amending those and appending them to make sure that they're covering the topics that are on your mind. So take a look at those things. Give us a call if you need to. We're happy to talk through it. But we open in 2 weeks, and we look forward to helping you.
Great. Thank you so much, Marquita. And I want to put out there too that the EDD recovery team, as well as I know NMFA, will be compiling all of these questions, all these very specific questions that are coming in through Facebook and YouTube, and following up with that. Marquita, really quick, we did get a question from Rick and Michelle A few people had it, and I'll throw you one last question.
Okie
Um,
dokie.
it's I am a single solo New Mexico owner of an LLC with no employees. Am I eligible?
Absolutely.
Okay,
And,
good.
and not only eligible, but now you can use more of the loan proceeds to help pay for owner salaries, basically for owner compensation. So you are absolutely eligible.
Okay, great. Thank you. This is good timing because my daughter is starting piano lessons in the background. I can hear it. So I'll spare everyone the I'll spare everyone that audio. But thank you so much, Marquita. Thanks to your team. And I just want to throw it out there to the public that it's been such an honor working with you all. We see the questions being answered in real time when those responses are coming back from recovery at nmfa.net. And I know you're working around the clock. So thank you. And thanks to your team for everything that you're doing.
Well, thank you all and have a really good day.
Okay. Thank you all. And please reach out to EDD. Let us know how we can be of service too. Thank you. Take care.